Hello everyone, it's Trader Paris again from Traderstock. This is going to be a video of the weekly recap of last week's, starting from the 24th and ending on the 28th of October. Now I'm gonna bring up the daily chart of the S&P, and I'm gonna first comment of what I said on the previous video. Let's see where we stopped. So that was the Friday, the 21st of October, and I said, since you have a rejection on the daily, and that was a rejection candle on the daily, the first logical resistance that of the S&P would be the 3,900. And as you can see here, let me just make the chart a little bit bigger for you. On Wednesday, the 26th of October, we went exactly, not exactly, actually the high was 97.50. It stopped at the high connection instead of the 3,900 level, which is almost the same as you can see here on this daily candle. And things played well, as I guessed, they did some profit taking. Now I'm not making predictions about the market like it's gonna go up to this level and then we're gonna go down all the way down. I just said where the first resistance is, and on Friday we broke the high connection and we broke the big level at 3,900 and went all the way up. Now it was, I would say, as you can see on the daily volumes, it was not the most interesting week. Again, people are betting on the downside, as you can see here on the volumes. There is a lot more volume coming to the downside than there is coming to the upside, and basically for the following reason. Every time for the last, I would say, 3 or 4 months, every time we see a slow moving upwards in the markets, blah 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 blah, it gets retraced violently. Goes down very, very fast. So in other words, people are very afraid to go long aggressively here, because the same pattern kind of persists. Now, why we are going up? People are going to ask. Well, I think I've said on my previous weekly recap that there is some shift on the tone from the Fed and all other central banks, and they are going a little bit. It seems like they're going to pivot, but I don't want to give a personal opinion about this. I'm just going to say what the market does. So effectively what they're saying, there was a whisper, and I think that was on the video of last week's recap as well. There was a Fed whisperer on last Friday from Wall Street Journal. I think Timaraos was the whisperer, and he said that they're going to slow the pace of rate hikes, the Fed, that is, and at some point they might pause. So it doesn't matter what we think, it doesn't matter what we believe. Again, the only thing that matters is what the market believes. If the market believes that it wants to go up, it doesn't really matter what you believe. We're here to make money, so we follow what the market wants to do. I'm going to say this in one sentence. So what does the market believe? In one sentence, the 1 year inflation forwards are discounting an inflation rate of 2.6. Again, in other words, that means the market thinks, or at least is trying to predict, that in 1 year inflation is gonna fall from 8% that we are standing now to 2.6%. Is that viable? Maybe it is, maybe it is not. Again, we're here to trade, we're here to make money on day trading. We don't care if inflation forwards are at 1% or minus 2% or plus 20%. We're just looking at the market from a technical standpoint. So that being said, the move of the market, the upside, the last week, it kind of makes sense. Now, since they are betting that inflation is going to go down. Now let's Okay, I'm gonna talk a little bit technically, at least for the daily S&P. Now, since we broke this big level, the 3,900, yeah, the way I see it, it should go up to the high of the channel, which is standing. Okay, now it's Sunday. We're gonna open here tomorrow, so it's standing around here, or it goes up first, up to the top of the channel, or it goes back to the 3,900. It retests again this support, and then we go up. Again, these are all speculations. Nobody knows what's going to happen until we open tomorrow, or what's going to happen the next week. We have Fed decision, by the way, on Wednesday. But let's not get ahead of ourselves. Let's look at the bonds. Now I'm going to bring you the 2-year. This is the 2-year chart, 2-year note. Let's go back on last Friday. So that was last Friday. You remember that was this support we broke, and we broke back in again to the upside. If you compare the move of the S&P and compare it compare it with the 2-year bonds, the bonds are still showing like inflation is not really yet. It doesn't look like it's falling. So I don't really understand why the equities have gone up by that much, but the bonds are telling a different story for now. Let me just bring you the 2-year, and I'm going to bring the 10-year as well. So at the top we have the 10-year, and at the bottom we have the 2-year. What did the 10-year do? Because it behaves a little bit better technically. We broke back through the break level, which was where the line is. The day we closed above, we retested exactly to the break level. You can see here on Thursday, last Thursday actually, the 27th of October, we retested, we went up, but we had some inflation numbers. I think it was Michigan. I don't really remember. On Friday, that was the inflation doesn't really show any signs of going down. Now, the only thing that I've seen that it's falling right now, if you wanna speak fundamentally, is the house prices. The house prices, the pending home sales, the new home sales are all getting crushed. But it makes sense if the mortgage rate right now is at 6 or 7% in the US. Who in their right mind is gonna go and buy a new house? Let's look as well at the euro dollar. Let me bring those charts back. Now, in terms of the euro dollar went above parity the last few days, retested parity again. Let's say the market should be bullish above parity and a little bit bearish below parity. Yeah, let's translate it like this. Again, the euro dollar hasn't really done much. Yeah. By the way, we had on Thursday we had the ECB conference. Yes, it was translated as a Davos conference. They dropped the hockey stone a little bit. I'm really surprised. Inflation is on a rampage in Europe, and Lagarde is. But basically, everybody knows this. I've said it in the previous webinar. What can they do? What can they do in Europe? Can they raise rates? No, I don't think so. They can raise rates. I think maybe they're praying every day that inflation by a magical reason is going to go down, or they're waiting for the US guys to destroy the whole economy, and maybe if inflation in the US is going to go down, then they're betting that inflation in Europe is going to go down. But they're definitely not hiking, really fast here. I mean, the rate right now, with a 75 basis point hike that they did on Thursday, it's standing at plus 1.5%, and the inflation in Eurozone is at plus 10%. These are wild times that we are living. This is the DAX chart, by the way. This is the DAX daily. I mentioned last week as well, but that it's astounding the up move in the DAX, but it makes sense. if there is so much liquidity in the world, in other words, there is so much money in the world, yeah, they don't want to buy the US products because the US products are falling, the US equities, let's say, yeah. They don't want to buy, they don't want to bet on any other risk asset around the world. Where are you going to bet? You're going to bet in Europe, where we have an interest rate of 1.5%. Make sure only from this fundamental point of view, it makes sense for DAX to be that high. Let's look at the DAX chart, and let's look at the S&P chart. Yeah, I'm not going to compare it with a daily Dow chart, because the daily Dow chart is as well for me at the moment looks a little bit overvalued. But what is overvalued nowadays? We live in crazy markets, and I have said in crazy times, and I have said at the point, okay, everything is bearish, everything is, you know, hawkish, we have inflation and blah 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 blah. Everyone is waiting for the Fed to pivot. And I'll tell you what, if at any point there is a clear sign that they're gonna pivot, expect the equity markets to explode, And right now, I just feel like everyone is short, yeah. And I'm saying explode because everyone is short. Didn't I tell you that trading is a constant search of stops? Again, on Wednesday, we're going to get some more clarity. We have the Fed interest rate decision. We're going to look for the wording as well. Like, are they going to pivot? Are they going to have slower pace in interest rate hikes, which means are they going to stop hiking 75 basis points and they're going to start hiking 50 basis points? Who knows? But the markets are kind of discounting that the Fed is going to be dovish on Wednesday. So that being said, since everyone right now, most of the people, I would say they're waiting, but those people that are trading and they're betting on a Fed pivot, I'm guessing if they do indeed pivot, the first reaction is going to be up on stops, and then it's going to be buy the usual buy the room or set the fact, and then we're going to go down, and then we're going to take it from there. Now let's talk a little bit technically again on the S&P. Again, the upside, we have this channel. On the downside, first level, we have the 3,900. Then the broken high connection. I have said many times, it's better if you trust. Okay, you're going to tell me Paris here is holding the high connection, but from my experience, it's better to play the retracement. Either it's a high connection or a low connection. So wait for it to break. Wait for it to close above as it stands like here. And then buy the retracement to the high connection, or let's say if you broke to the low connection, sell the retracement to the low connection. In our case, it's a buy at okay, the low connection is going to be 1 day later. Let's say if it retraces back to the low connection. So first level 3,900 serves as support since we closed above. By the way, we stopped at the 62%, but I don't really trust Fibos right now. So if it doesn't hold the 3,900, then I'm pretty confident it's going to stop at the broken high connection. Now, which day is going to do it? It's going to do it the next day, or the day after, or the day after. Just remember, as days pass, this is a downward slope, so it's going to be a lower, and as each day passes. Now, we have as well a small resistance here at 36. The high was 24, so we might open. We can do it on an overnight move. Who knows? There is a small resistance there. The upper channel, and then we have the 78% of this move. 31. I don't see any other level in between. So that's it about the upside. Now let's look a little bit at the Nasdaq chart. Nasdaq. Wow, this is the daily Nasdaq. Let me just. So Nasdaq has not gone up by much. You wanna know why? Let me tell you why. Because of the 10-year. Here is Nasdaq daily, here is the 10-year. The 10-year hasn't done anything much. Nasdaq is a rate intensive product, so if rates are going to be high, who wants to buy Nasdaq? Plus, you saw what happened on Facebook, and when they announced it, that was 30% down. So Nasdaq hasn't really done much. What has really gone up is the Dow future. That's wow. The all-time high is, I think, 36,000, and we're currently standing at 33,000 in the Dow future. In the Dow future, yes, with an 8% inflation rate. So things are about to get even more crazy from the way I see it. I'm gonna do a bonus video today as well. Please watch it. Please go and watch it, because I'm gonna explain how you should trade on low volatility environments. As you're gonna tell me, Paris, is this a low volatility environment? Well, if you compare it with the previous month, yes, we are in a low volatility environment. Just so you know, the VIX went from 30 something to back to from 36, I think, back to 26, 27, which with all those things going on, it's quite low volatility for me. And you can see with low volatilities and upside, you have lower moves, smaller moves. By the way, most of the moves, they happened at the close. We have a buyback period again has started, so maybe they're doing buybacks, who knows. But since I'm trading from the cash open, and for 1.5 hours, I don't see any moves. They are most, since Monday was a little bit crazy, which we had volatility interruption on manufacturing production. That was crazy. I mean, who would have thought that in 2022 the market's gonna do? The S&P had volatility interruption on US manufacturing production, which is a tier 3 figure. We weren't even watching it, that kind of figure. Nobody cares about this figure, and we had volatility interruption on manufacturing production. Just wow. And then we had a move like 30, 40 points on the figure. Insane stuff are happening. And after Monday, dead. It was just the range trading in the morning, and then it was going up in the afternoon, the US afternoon. So I'm gonna make a video and explain how you should trade, how you should have a different strategy according to if the volatility is very high or if the volatility is very low, and how you should do it. Again, things are boring. We are going up. It feels like we're gonna keep on going up until Wednesday, and Wednesday, keep my word, Wednesday we have the interest, the Fed interest rate decision. The party starts again on Wednesday. We have no new piece of news. With the war, everything is well known. We don't have any black swan right now, so things are a little bit, let's say, I wouldn't say predictable, but quiet, and everyone waits for Wednesday on what the Fed is going to say. By the way, the ECB, the Bank of Canada, the Bank of Australia, all kind of mini pivoted. I'm saying mini, yeah, because if you read the whole statement, it's a mini pivot. Now, the markets are discounting for a full pivot or a full pause, let's say. These moves are a pause or a mini pivot. We will find out the truth on Wednesday. Until then, not until then, actually, I'm going to have a recap video on next Sunday or next Saturday as well. And we're going to do again a recap of what happened of the week that's about to come. Thank you very much.